All right, class, I quickly want to go over one of the two homework assignments to give you guys a full-fledged recount and so on and so forth of what you can do. So I have uploaded a picture of the answers for the first assignment, which is the one under chapter 3, says journal entry practice part 1, do 11.5. I have uploaded a picture for both companies, and I just want to go over the journal entries with you as if we were in class to give you an idea, because we're going to be moving on to the next set of slides in chapter 3 today. Okay, so go ahead and open that up. There's two problems. It's on PowerPoint slides there. So the first thing I want you to do is take a look at the Leon Bear on May 2nd. And if you pull the picture up of the homework assignment and the answer assignment that I have, you'll get an idea. I want you to try to follow along with me. You may have several different windows open to do this. Hopefully some of you guys are able to have double screens. I know it's hard when I'm working on the Surface. I only have that small screen in which I do all the recordings from, but I am trying to sit down at my home computer, which, well, I'll give you an idea what my home computer looks like, which is just obviously stocks, which I'm looking at, and then I have this and keyboard, and right outside a beautiful picture of a beautiful day today. So I understand it's hard, hence the reason why I did give you guys the picture of the answers to follow along. So take a look at Leon Bear. It says on May 2nd, Leon started a computer service by investing $5,000 in exchange for common stock. So you're working for the company. So your cash is what he's investing, and he's going to get common stock in return. So you're going to debit cash and credit common stock. May 5th, purchased a computer for $2,500 in cash. If you wrote the word computer down, that's fine. Computer is part of equipment. Equipment is like telephones, computers, printers, desks, things like that. So I debited equipment for $2,500 because that is an asset. It goes up with a debit. And I credited cash because cash goes down with a credit. May 7th, purchase supplies on credit. Whenever you purchase something on credit, that means accounts payable. So here we purchase supplies. Supplies is an asset, goes up with a debit. And the credit, that means we're going to be using accounts payable. So accounts payable actually goes up, but accounts payable is a loser, so it goes up with a credit. So we have a debit to supplies and a credit to accounts payable. The next one, May 19th, received cash. So if you received cash, that means cash is going to be going up, and you show cash going up with a debit. And then it says cash for programming services. Well, Leon's starting a computer service. So I just put service revenue. Whatever account you call it is fine, as long as you understand that that's your revenue account. And revenues go up. Hopefully you guys have got this down with a credit. So you're going to debit cash for $500 and you're going to credit revenue for $500. The next one on May 22nd, received cash for programming services to be performed. Now, this is just a play on words, and this is some of the things that I have to get across to you guys in the meantime. All right, in this case, you received $500 cash already, okay? The problem is that it says for programming services to be performed. That means you actually haven't done anything yet, okay? So technically, you owe them something. The example that I give usually in class is, for those of you that are in any maybe Greek organization or any student activities organization, it could be, the snowboarding club. Excuse me. For instance, if people come down to my restaurant and order 5 pizzas, but they don't want to pick them up till, say, tomorrow, but you pay for them today. Okay, so you paid for things that you're going to get, but you're not going to get them till tomorrow. Technically, today I owe you guys something. I owe that person those pizzas. So technically, when you owe somebody something, that's the definition of a liability. So until this programming services have been performed, I actually owe these people something. So in this case, when they're saying to be performed, again, the play on words, to be, implying that it hasn't been done, it will be, but it has not been done, means that we actually owe them something. So on May 22nd, cash received for programming services to be performed is actually a debit to cash because we did get the cash, but the credit is going to be to a liability account because we owe them something. And the liability account that we use when we owe somebody something as far as in services is what we call unearned because we haven't earned that revenue yet. Okay, so that's unearned revenue. So you're going to credit for unearned revenue, and unearned revenue is a liability, and liability accounts go up with a credit. So you're going to debit cash, credit unearned revenue, which is a liability account. The next thing is May 25th. Paid the rent for May, $650. So that's going to be rent expense as a debit. And obviously, if you pay for something, we're going to be using our cash. So our cash is going down, and you show cash going down with a credit. The last one is May 31st. You billed the customer for programming services. Now, this one is another play on words. You billed the customer for something you've done. In this case, you've done the work, but you haven't been paid. So if somebody owes you money, that's the definition of what we call accounts receivable. Okay? That means you've done the work, but you haven't been paid yet. So that's going to be a debit to accounts receivable. And in this case, the services have been performed. So that's your revenue account, which in my example that I wrote down and gave you guys a picture of is my service revenue account. So I'm going to debit accounts receivable because that's an asset. It goes up with a debit. And I'm going to go ahead and I'm going to credit service revenue. Now, one thing that you guys should already have is this done. So you should be following along and just making some changes to what you guys may or may not have done wrong. I haven't gone through and graded them yet, which is going to be my nighttime gig tonight. Unfortunately, last night I was too distraught with my New York Jets blowing a lead to the New England Patriots. So that was quite disheartening. So the next step it says for you guys is to set up your T accounts. And as you can see on the right-hand side of the paper, I wrote up T accounts quickly. The way I do it is I just start with the first journal entry. So the first journal entry has two types of accounts. It's got cash and it's got common stock. Now, for most of our examples, some of these are just going to be what we call like one-hit wonders. There's only going to be one thing that's going to be put in each one of the accounts. Cash happens to be one of those repeat Grammy winners because you're going to keep using the cash account. So make sure that when you make your T accounts, you make your cash account a little bit larger than some of the other accounts that you only have one debit or credit to. So you can see my first debit up there is $5,000. And then I have the common stock account written down towards the bottom for $5,000, both on separate sides. So then I went ahead and I did all of them. I did equipment and cash. Notice the second on May 5th, equipment was a debit and cash was a credit. So if you go to your cash T account, I got $5,000, which was my cash debit in the first one. The $2,500 or $2,500 credit is on the credit side of that T account. So once you've got all them done, you just go ahead and you just add up your left and right hand sides and you figure out what side has the balance on. So as I look here, you can see that on my cash account, my balance on my debit side totaled $6,100. My total on my credit side was $3,150, which means I have $2,950 on my debit side. All right. So sorry. So my balance in my cash account is 2,950. After you go ahead and you put all those together, you'll see down on the left-hand side of the piece in the picture, you'll see my trial balance. Now, whenever you perform the trial balance, it's meant to be put in order of ALSDRE: assets, liabilities, stockholders' equity, dividends, revenue, and expenses. As you can see, I started with cash, accounts receivable, supplies, equipment. They're all assets. The next one is accounts payable. Unearned revenue, those are both liabilities. Common stock, which is part of my stockholders' equity. I don't have any dividends paid in this one, so you don't have to worry about writing anything for it. Then I have service revenue, and then my expenses. Now keep in mind, they're all on the same side, on the correct side, whether it's a debit or a credit. Once you have that done, go ahead and add them all up, and you'll see that at the bottom, this comes up to $66.50 on both sides, which means you've done it correctly. Okay? I'm going to flip over my page, and I'm going to go over to Sarah's Beauty. So pause your video for a minute. Go ahead and grab Sarah's Beauty information up, and let's rock on that one. So, Sarah Lopez established Sarah's Beauty Parlor Inc. by incorporating and investing $2,500 in exchange for 250 shares of $10 value per value common stock. Blah, blah, blah. You'll learn all about common stock and managerial. So, first account is going to be cash debit, common stock credit. That's been the same way it's been throughout the whole time. If you look through slides in chapter 2, it's that perennial template that you see there. There's an exact template of this journal entry there. It hasn't changed at all. Second one, prepaid rent. Paid 2 months insurance. Oh, excuse me. That should be prepaid insurance, not rent. So I made a slight mistake on my thing here. October 2nd, instead of it being prepaid rent, it should say prepaid insurance in advance of $1,680. Okay, so you're going to debit prepaid insurance, cancel my rent there, prepaid insurance. And since I'm paying it, cash is going to go down. Prepaid insurance is a good thing. For those of you that live off campus, you prepay your rent for the semester. Most of the landlords in Delhi require you to pay for your entire semester at the beginning of the semester. Why? It's because, say you get kicked out, suspended, you throw a party, you have a COVID crisis, whatever, and you get kicked out of school. Well, chances of you staying in Delhi, even if you're kicked out of school, is slim to none. So the landlord's not going to give you money back because they rented your room to you for the entire semester. So they're going to keep all that money, and that's why they go ahead and do that. There's been college students that have been arrested and put in jail for, some really, silly crap, but I don't really call it, well, I don't necessarily think it's silly crap. I don't think they would have been put in jail and arrested and had time put on them if it was such silly crap. Some of them were really hardcore drug dealers. Years ago that happened. And the kid lost his entire year's worth of rent. He got caught at the beginning of the semester, the fall semester, and he had paid for both fall and spring. So he spent his time in free lockup somewhere in some jail somewhere. But the landlord took his money and ran. So we have prepaid insurance and cash. I'm still talking about rent there. I keep getting myself mixed up on that one. October 3rd, purchase supplies on account. Supplies is an asset, which is going to be a debit for $1,200. And it says on account, which means accounts payable because we're going to owe it to somebody later. And accounts payable liability goes up with a credit. October 4th, received cash for salon services. Well, that's what kind of business we're in. So my cash is going to go up and salon services is going to go up. Cash is an asset. It goes up with a debit. Salon services or any type of revenue is a credit. So you're going to credit for the $700. Here's where paying attention to what things and just being able to look back at things help you. Paid for supplies purchased on October 3rd. So now here's where you're going to pay for those supplies. But the key here is that we've already done the work with the supplies account. First thing you got to think about on October 5th when we're paying for these supplies is the amount of cash that you have is going to go down because you're going to pay for something. But the other part of that is the liability, meaning the amount of money that we owe somebody is going to go down. So the accounts payable is going to be a debit for $120 because our amount of money that we owe somebody is going to go down, which is the accounts payable. And then our cash is going to go down, and liabilities go down with a debit. Cash goes down with a credit. So it's going to be accounts payable $120 debit and cash credit for $120. October 5th, paid the current month's rent. So it's going to be rent expense and cash. October 6th, received and paid the utility bill. So that's going to be utilities expense and cash. And October 8th, it says declared and paid a cash dividend. So it's going to be a debit to dividends. And if you paid somebody something, meaning cash, that means it's going to be credited. So it's going to be a credit to cash. The main thing I want you to take a look at once you go ahead, and I'm not going to explain the whole T accounts again. I do want you to take a look in particular at your accounts payable T account. If you look at my accounts payable T account, it's got 120 on the left and 120 on the right. So if you've got 120 on the left and 120 on the right, that means they balance each other out and it's back to zero. Now, you technically don't have to write the accounts payable in the trial balance because there's a zero balance there. I did write it in there. However, you wouldn't be marked wrong if you did that. I just wanted you to understand. I just like to see, because accounts payable is one account that every business typically has. So as you can see, I went ahead and I wrote up my trial balance with my assets first, my liabilities, my common stock, my dividends this time, then my revenue, and then my expenses. And you can see at the bottom of the page, both left and right hand sides come out to $3,200, which means I would be able to proceed to go on and continue with the problem. Now, the one thing I want to point out to you is that once your trial balance is done, the trial balance is where we get the information to complete our financial statements. You guys have already completed your financial statements. You would first take this information that you see on your trial balance, and you would go ahead and work on your income statement. Then you would move on to your stockholders' equity. And finally, last but not least, you would end up doing your balance sheet. So that's why we kind of teach you the financial statements first and then backtrack into them. But you would have to have a trial balance to work from. Okay? So I'm going to sign off on this video. I'm going to upload it. I'm going to send you guys an email, and then I'm going to be uploading chapter 3 for you here in a moment. Talk to you soon. Bye.